So what's the market going to do in the next few months? We don't really know, but we do know that traditionally the real estate market lags behind the economy about 12 months. We're going to be able to see what the unemployment numbers look like when they are released on April 3rd, and that will give some indication of what is to come in the market. What we are encouraging people to do, if you are an investor or are thinking about investing in real estate, now is a really good time to go get access to capital. The simplest way to do that for most people is to go take out a home equity line of credit. It's basically just giving you access to the equity that you have in your home. Here in Northern Colorado, if you've owned your home for a number of years, you likely have equity sitting there. The nice thing about a home equity line of credit is it's a very small cost to get access to the line, and it's like a credit card. You don't pay any interest on that money that you have access to until you use it. So you can gain access to that line this year, and if you don't use it for 2 or 3 or 4 years, the cost to maintain that line is next to nothing. So if you are an investor thinking about being a real estate investor, go get access to a line of credit. Do not sell stocks. Do not free up your cash that way. Just use the equity that you already have. So why do you want to free up cash? The reason is that you want to be able to have cash available when an opportunity arises. If, for instance, we do end up in a recession or unemployment numbers last longer than we think they're going to, and it does in fact affect our real estate market, that means that opportunities are going to arise for real estate investors, specifically foreclosed properties, distressed properties. And it's going to be key to have that cash available when that happens, as opposed to scrambling later on to try to put the cash together. So traditionally, the way that our Northern Colorado market has performed in times of recession has been pretty positive. So we've had a couple years of depreciating numbers. However, if you look into those numbers further, although our median price point has come down 1% or 2 a couple different times, really what's happened is the bottom of the market has continued to appreciate. The top of our market has dipped. And then even within that, we see a number of increased distressed properties, i.e. opportunities for real estate investors. So any questions, feel free to reach out at any point. I'd love to talk through some more of the details of what this looks like.